All right, so you've been doing your homework and you're thinking of selling your home to your kids, or you may be wanting to buy the home from your parents and you saw that a gift of equity sounds like a great deal and something you should definitely look at, and you're right, you should. It's the best way to do this type of transaction, and in this video, I'm gonna break down everything you need to know. But first, all right, a gift of equity. This is when a family member is selling the home to another family member, grandparents to grandkids. I've done that multiple times. Most of the times it's parents to kids or vice versa, okay? And you wanna use the equity in the home to help reduce the cost and the money you're gonna need out of pocket, okay? Now, you can do this on any loan type, FHA, VA, conventional, right? Any of those. So whoever is buying it, if they're pre-approved for a certain mortgage type, you can definitely make it work, okay? Keep in mind, you should have multiple parties involved in a transaction like this, right? A lender like myself, I structure many of these deals, right? You may be working with a realtor, they'll structure a deal for you. You want to have a title company involved so that way you can have it done properly and see the numbers for both sides, right? Sellers included. So let's break down a general example on exactly how you want to structure a deal like this. When it comes to gift of equity, the key here is that the home you're willing to sell, let's say you're the parents, to your kids, you want less than what the home is actually worth. Maybe you just want them to pay off the mortgage. I see that example a lot. And I do probably a gift of equity deal once a month, if not more. So I'm an expert when this comes to this, right? So if you're watching this video, reach out to me and I'll walk you through the whole thing. So let's say that you want to sell the home to your kids for $300,000, but it's worth $400,000, okay? Instead of doing $300,000 and then they're having to bring 5%, 20%, right? And pay their closing costs. Yes, they're getting a deal, but they're bringing a lot of money out of pocket there, okay? You want to use that equity to offset it. So what we would really do is we would make the sales price what the home is worth, right? Now, if you don't know what the home is worth, there's a couple ways to go about this. Could be what the county appraises it for, right? Which tends to be on the low side. You may reach out to your realtor and say, hey, what is my home worth, okay? So there's a couple things to do that. And during the mortgage process, there's going to be an appraisal order that's going to confirm that value, okay? So let's say, again, the home is worth 400 grand, but you only want 300,000 for it, okay? The sales price is gonna be 400,000, okay? And then you wanna figure out how much you need to pay in your child's closing costs to reduce their bottom line for the money they need out of pocket, right? New escrow account, costs of rate, title fees, lender fees, appraisal fees, all of that, okay? And that's where having a lender work up an estimate is a must. Let's just say for simple math, it's $20,000, okay? So we now know we need 300,000 plus the 20,000. So now we're at 320,000, okay? That's gonna be the loan amount, because that would be your proceeds you would receive, 320 roughly. 20,000 will go toward paying their closing costs. You're left with your 300. Great, Dave. What about the other 80,000? Great question. 80,000 that's left over is going to be their down payment on the home, and the equity is gonna stay in the home. If the proceeds are not going to you, right? They do not need to bring the proceeds to closing. It's truly staying in the home. So in a perfect scenario, that's 20% of 400,000. So it shows a larger down payment. This is important because it now allows your child to get a better loan, let's say no mortgage insurance, because of using that 80,000, right? And the 80,000 stays in the home. Now, one additional piece that you have to keep in mind here is as a seller, you want to see these numbers worked up. The buyer needs to see the numbers, the seller needs to see the numbers, which would be the title company. I would make sure that all parties are talking to the lender and realtor, if there's one involved, on if everybody's on the same page, the numbers, everything else. Every time I do one of these transactions, I've got mom, dad, the child, everybody involved is on one email to make it as easy as possible going into it, okay? And that's the easiest, best way, without a doubt, to sell your home to your child, grandchild, or to buy it from a relative, okay? That's a general example. You don't need to have that much equity. You could have $10,000, $20,000, right? Now, in that example, you could have $500,000 in equity in the home, and we're gonna use that. And here's an additional piece. Dave, what happens if the home appraises for more? Fantastic. We can amend that sales price from, let's say, 400,000 to 420, still keep that 320 number that we discussed, but now they have $100,000 for their down payment. That's going to allow them to maybe get a lower interest rate, right? Or if there was a lower amount previously and they had MI, mortgage insurance, what happens if they now have less, right? Hope you found this information helpful. If you did, reach out to me. I structure these deals monthly and I'd be more than happy to walk you through the entire process. And by the way, stick around for this next video. I think you're gonna like it.